I'll refer to one of your comments in terms of my introduction to the next presenter, First Mining Finance, that the average cost to find an ounce of gold in the ground now is around $50 an ounce. So what this next company, First Mining Financing, is doing is going out and acquiring those ounces that are in the ground at a deep discount to that, less than $10 an ounce and as low as $7 an ounce. And that's a strategy that Keith Neumeyer has put together and that Pat Donnelly is taking forward with First Mining Finance. Pat.
Thank you, Scott. So this is the second time I've been here. I was here in May, and it was just after we got listed. And as Scott mentioned, our chairman is Keith Neumeyer. And for some of you who have never heard of Keith Neumeyer, he's got an unparalleled track record of not only identifying the bottom of the market, but creating tremendous value for his shareholders. And Keith truly believes right now this environment is probably one of the, and you probably agree with this, probably one of the worst environments he's ever seen in mining. And that being said, it creates incredible opportunities to go out and acquire high quality assets that are highly, highly undervalued. This opportunity right now is probably, I've been doing this for 20 years. I've never seen anything like this. I haven't seen anything this bad since the Brien scandal of the late 1990s. And I'm a geologist, and I've been doing this for 25 years. We're going out and we're acquiring assets, and in some cases we're going after companies and forcing them, companies that are kicking and screaming to let us acquire them. There's numerous management teams out there that are entrenched. They're paying themselves incredible amounts of money, and every year they go out, they'll raise a few $100,000 and dilute their shareholders, and then they pay themselves, and we call them and they ignore us. So we're going to go out there. I already have been going out there and making a lot of noise. So we're all about shareholder value and taking advantage of this market. Again, here's the forward-looking statement. Please take a look at that. We will be making forward-looking statements. So my background, I used to be an analyst. I was an analyst for 4 years, and one thing I learned when I was an analyst is it's people. Good companies are run by good people. And again, that's why I joined. I joined this company exactly a year ago. Number one reason, Keith Neumeyer. He's founded First Quantum Minerals, First Majestic Silver. He's done very, very well. And Keith's number one priority are his shareholders. Chris Osterman, he's our CEO and director. He's a PhD in geology. He's also a mining engineer. I've never seen this before where a mining engineer became a geologist. At first, I thought it was a little bit funny. Myself, I'm a geologist, and I also spent 4 years as a mining analyst with Salmon Partners in Toronto. So what is our strategy? It's simple. Go out and take advantage of this market and acquire assets. We got this company started in April. We had 0 ounces, and since then we've acquired four assets, or 4 companies, and now we have over 8 million ounces of gold. We're going to continue to do that. We're seeing some of the lowest valuations in this industry in at least 20 years, and probably longer than that. We're going to continue to make acquisitions, and we're not looking for garbage. We're looking for good quality assets that would make money at $1,100 or $1,200 gold. We're also like copper assets, zinc assets, and the focus will be on the Americas, Canada, United States, and Latin America. We will hold on to these assets. We're not going to explore. We're not going to drill. Let me put it this way. It's cheaper for me to go out and buy gold, buy ounces, than it is to drill ounces. 10 years ago or 15 years ago, you give me $10 million, I'll drill you 1 million ounces. Now, it's cheaper for me to buy 1 million ounces. And this market is broken, and we're taking advantage of it. So what is the longer-term strategy? We're going to buy these companies out, hold on to their assets. I personally think we've got a couple more years of this pain, but it will turn around. And when it does turn around, we will enter into agreements with other parties. They'll take the asset, they'll move it forward. We'll hold on to residual interest, either a stream, a royalty, a joint venture, a spin-out, or minority interest. And ultimately, pay a dividend to our shareholders. That's the long-term strategy. We're not going to drill, we're not going to explore, we're not going to do any of that. The market is not giving credit for those activities. I think I've seen this chart a few times today. I'm not going to accuse anybody of stealing it. That being said, as you can see here, there's an incredible opportunity out there to get very highly undervalued assets. I've never seen anything like this. My father was a miner. He lost his job in the early 1980s. He says it's worse now than he's ever seen it. It is really bad, but that being said, now is the time to build a company. Keith Neumeyer did it with the first Quantum in the early 1990s. He did it with First Majestic Silver in the early 2000s. This is his third and last company. He's doing it again. And we're very, very, very aggressive. So when we look at assets, what are we looking at? Obviously, quality asset, grade, size, metallurgy, that sort of thing. Jurisdiction is very important. There's certain areas we will not go into. We like Eastern Canada, we like Nevada, Arizona, Mexico, Chile, Peru, maybe Argentina, we'll see what happens, maybe Colombia, maybe Peru, but you know, in the Americas. And I'll also add that our sister company is First Majestic Silver, so I do have access to their people, and they have a lot of experience in Latin America. Infrastructure is critical. I won't go anywhere without a road, power, those sorts of things. Land tenure. If there's First Nations there and Ejidos, they don't want us there, I'm not going there. I'd rather not deal with it. Holding costs are critical. Taxes, assessment work. Most of these projects we're looking at have had tens of millions of dollars spent on them. So therefore, their assessment work is usually in pretty good shape. Valuation, we won't pay any more than $10 an ounce. And there's dozens and dozens and dozens of assets out there that are significantly lower than that. It's incredible. I'm seeing companies out there trading at $2 or $3 an ounce. I'm seeing companies out there with ounces and cash, and they're trading at half a cash. It's unbelievable, and we're taking advantage of it. So we got listed in April, and we decided, okay, we went through, we had a list of over 100 companies that had assets. And one that was near the top of our list was Coastal Gold. There was one problem. It was owned by Stan Barty. We said, screw it, let's take him on. We went in there. He was trying to marry this with his other company, Sullivan Mining Capital. We called them up. I called them up. Let's do a deal. They said, get lost. Okay, let's do it the hard way. We went to the courts. We went to the shareholders. We pinned them to the floor. We made them do a deal. We paid $9 million. And we'll do it again. Great asset, Hope Brook asset, Newfoundland. About 1 million ounces at 5 grams would be economic right now as a power line. Newfoundland's a fantastic place to do business. We went to go see the government, and they said, what do you need? We can permit this thing in a year if you want to. So again, we were very, very happy with this. And it was basically a hostile acquisition, and it won't be the last one. After that, we weren't done yet. We decided, well, we were looking at 2 other companies, Gold Canyon and PC Gold. Which one should we go after first, PC Gold or Gold Canyon? What the hell? Let's do both of them. So we grabbed both of them. We took over Gold Canyon, 5 million ounces in Northern Ontario. It'd be economic right now. And they have the Spring Pole project. PC Gold, they own the Pickle Crow mine, and that has over 1 million ounces high grade. Actually very similar to what you guys have in Nunavut there. It's in iron formation, great project, road, infrastructure, grade, incredible upside. So we closed that in early November, and at that point we had over 8 million ounces of gold. And then just recently we closed the acquisition of a company called Gold Rush Resources. It was mostly a financing. They had over $3.5 million in cash. We paid NAV for it, and now we're getting ready to pull off our next acquisitions. So now we have over 21 assets in Canada, United States, and Mexico. Mexican assets are mostly early stage, drill ready assets with mineralization. We have Turquoise Canyon, again, that has mineralization, drill ready. But our flagship assets now are in Canada, Spring Pole, Pickle Crow, and Hope Brook. And we're not done yet. I'm probably going to put out a press release in another couple of weeks for our next 1, maybe 2 acquisitions. So we're just getting going, and we plan to go hostile. So here we are. What's so funny? So when we got started, we had our market cap. We had a $36 million Canadian market cap. Now we're at over $120 million market cap. Keith, every time we do these deals, there's excess liquidity. Keith Neumeyer comes in, pulls the trigger, and starts buying shares. He owns over 5% of the company. He cares about his shareholders. He cares about the company. He's doing this not to create $1 million company or a $100 million company. This is going to be his next $1 billion company, and he feels strongly about it. Now, when we do these deals, we're using our shares. And people ask me, well, isn't it dilutive? And I take great exception to that. They're accretive. We're buying assets for less than $10 an ounce. In terms of gold in the ground per share, we increased it by 182%. So it's good for our shareholders. It's also good for the shareholders of these other companies we take over. We're adding gold, and we're making accretive acquisitions. Share structure, We got probably got about $3.5 million in cash, market cap over $120 million. We also have great liquidity. Since the beginning of the year, we've been trading on average between 1 and 2 million shares, and we can handle it. So a lot of juniors out here, they have no liquidity, and that's what attracts us. I get calls every day from companies begging me to take them over. And I'll say, well, let's see what you got. Let's see what's underneath the hood, because they like our liquidity. So our shares, people ask me, is the problem using their shares? It's not. We've got great liquidity, great team, and a great business model. So when we unlock value, in 2 or 3, 4 years, we'll sell these assets, but we'll hold on to residual interest, joint ventures, earn-ins, equity positions, royalties, streaming options, spin-outs, and unlock value for our shareholders when the market turns. And I hate to say it, it's going to happen in a couple of years. What keeps me up at night? That goal to run back up to $1,800 and this market takes off again before we finished our acquisition strategy. So I just wish I just want another year. Just give me another year, and then we'll get this done. So again, First Majestic Silver is our big brother. We work in their office, have access to all their people. We have 21 assets and growing. And we added Hope Brook, Gold Canyon, and Pickle Crow. And we'll continue to use our shares, our contacts, and our cash to acquire assets. And when things turn around, we're going to go on a run. And I'll leave it at that. Thanks for your time.